Not everybody pays the same amount to the federal government for their baseline Medicare coverage. You might have heard of a high income penalty or high income surcharge. In this video, I'm going to go over what that is, if it might apply to you, and how to appeal it to get it reduced or even eliminated if life circumstances qualify you to do so. In the description of this video, there's a link to a page on my website with all sorts of resources around this, links, the most up-to-date information, and some tools for you to use to help if this applies to you. So what is this surcharge, this penalty? It's called IRMAA, I-R-M-A-A, and it stands for Income-Related Monthly Adjustment Amount. Basically what this is if your income is above a certain amount, you are going to pay this surcharge above the baseline cost for Medicare. So your bill from Medicare every month is going to have up to 4 line items. There's your Part A, which is usually $0. Most people pay nothing for it. There's Part B, which everyone pays at least the baseline amount for. And then if IRMAA applies to you, then you're going to have an IRMAA surcharge for Part B and an IRMAA surcharge for Part D. So up to 4 line items. And the tricky part about this, where this gets a little complicated, is they use your modified adjusted gross income from 2 years ago to determine your IRMAA bracket and what you will pay for your Medicare in the current year. So this creates a little bit of a mess when you retire. That's the most common scenario where people run into this and maybe trying to appeal it. So let's paint the picture here. So let's say you retire in the middle of the current year and you're going to start Medicare the next month after you retire. Well, you're going to be paying Medicare premiums based on your income 2 years ago. And if your income was high enough to trigger IRMAA for you, then you're going to be paying higher than perhaps you should have, because you retire in the middle of the year, your income is obviously going to drop. And let's say your current year income is actually going to drop you down into a lower IRMAA bracket or just out of IRMAA range at all. And you'd like to just pay what the current year applies to. So can I eliminate that 2-year look back because of my retirement, because of this drop in income? And the answer is yes. And we'll get into how to do that here in a second. If you haven't enrolled in Medicare yet, you're starting to plan for it, starting to get your ducks in a row, then figuring out the IRMAA brackets for the year that you're going to start Medicare is a smart way to understand what your all-in Medicare costs are going to be, because they can go up significantly if IRMAA applies to you. If you're already enrolled in Medicare or you just did, you're going to get a notice from Social Security that explains, hey, IRMAA applies to you. Here's how much based on what we have determined, what we have on file for you, because they look at your tax returns from the IRS. And it does get updated every year. If IRMAA applies to you, you're going to get a notice for the next calendar year in late November, early December, usually in the mail from Social Security about this. But if you're watching this video, you're learning about IRMAA for the first time, I'm willing to bet that you are retiring soon, or you recently did, and you need to do something about IRMAA. You heard you might be able to do something about it. You can do what is called, you can submit what is called a reconsideration request. It's kind of like an appeal. And basically what this does is, if your income's going to drop because of a life-changing event, i.e. retirement, and that then you can spell that out for them and say, hey, my real income is this for this year. Let's not use the number from 2 years ago. And they will let you do that if everything trues up, if you file it the right way. So I'm going to walk you through the form that you need to fill out and just give a little bit of color commentary on it. So here is the form. It is called SSA 44. You can see right here, Medicare Income Related Monthly Adjustment Amount, Life-Changing Event. Okay, so if you had a major life-changing event and your income has gone down due to that event, you may use this form to request a reduction in your IRMAA. Okay, great, we're in the right place. Name, Social Security number, and then it shows the IRMAA brackets for the current year. As I record this, it's 2025, so here are the 2025 numbers based on 2023 income. It spells that out for you, basically what I've said up to this point in this video. And page 2. Page 2 is where you start to get to work. So type of life-changing event. There are 8 different types. Let me just go through them real quick. Marriage, because that's going to change your tax filing status from single to married. Divorce or annulment, tax status from married to single. Death of your spouse, from married to single. Work stoppage, that is their term for retirement. So this is the one you're probably going to be looking at. Work reduction, this is I'm moving to part-time and my pay is going to be lower because of that. My income is going to be lower because of that. Loss of income producing property. This is not the sale of an income of like a rental property. This is loss of it because of like a fire or condemnation, something out of your control. Loss of pension income if your pension plan went belly up, and then an employer settlement payment if you had like a one-off settlement for 1 year and it just abnormally spiked your income, then you can kind of smooth that out here. If you've got things like a conversion of a Roth IRA or capital gains, I'm sorry to say you're just going to have to ride that out and pay the penalty via Medicare premiums for that year. And then the date of the life-changing event, pretty self-explanatory there. Step 2 is what is the reduction in your income based on that event. Step 2 is basically what they want for what's already occurred. Basically, this means like current year. So if you retire in the current year, you're going to put the current tax year. And then what your adjusted gross income is estimated to be for that year. And then tax exempt interest, ask your accountant if this applies to you, but this is the modified part of the modified adjusted gross income. And then your tax filing status. Make sure you check the right one here, especially if there's a marriage, divorce, or death of a spouse, because this is what's going to change. And your tax filing status can change how the amounts line up to IRMAA brackets. Side note here, they will accept retroactive, I believe up to a year prior. So if you paid IRMAA and you shouldn't have, or as much of it for a whole year or some of the year prior, you can put that tax year here and what the adjusted gross income should have been there. Step 3 is for anticipated reductions for the next year. So a simple way this would work is, okay, I retire this year in the middle of the year. So my income is going to be lower for this year than it was the year prior, the year before that, but it's kind of stepping down. But next year is going to be my first full year retired, my first full year with that new lower income, like as low as it's going to go, because I'm living off my investment income and it's going to be steady at that lower amount from here on out. That's what step 3 is. So for next year, put that in here. My estimated income is this, to the modified part if you need to. And so that is an important thing to get done too, because remember, it's a 2-year look back we're trying to smooth out. Step 4 is documentation. So we'll get into that in a second because they've got directions lower than this, but you sign off on it, self-explanatory. Here's a privacy statement. All right, and so then this pretty much spells out what I just walked through. So I'll let you read that on your own. And then let's get down to the documentation. All right, so this table is going to show what they want from you to substantiate what happened, the evidence. So let's focus on work stoppage or reduction. So they want an original statement from your employer, like a separation letter, copies of pay stubs, because they'll take that, reduce it from the last tax return that they have on file from you from the IRS. And if it's, within reason and it makes sense, then, you'll be good to go. I would also, on top of this, it's overkill. They don't ask for it explicitly, but I just advise people to do this. Do a spreadsheet of what your current year income is, just with all sources, and spell it out for them in more detail. And I've got a link to a Google sheet with a template that is a template that will help you do that very easily. So you would do that, print that off, or print it to PDF to combine with this completed form. Okay, and then a couple other facts here. They do check what you send in with the IRS eventually. So when the year in question comes around, when you filed your tax return, they're going to true this up. And if there's something off, then you will be billed for the difference if that ends up being out of your favor. And they will ask for a copy of the tax return of the years in question. So just be aware of that. Be prepared to give that to them. How you give this to them: print this off, fill it out, sign it, get all the other supporting documentation together, and upload that into one PDF. And then you can upload all of that to your Social Security account. You can also mail or fax the completed documents in, but I tend to favor the upload because it's instant confirmation that they've received it. And you're just eliminating the risk of lost mail or a bad connection with the fax, things like that. So that is how to request a reconsideration. That's how IRMAA works. Let me know in the comments if you have any questions or if you need more clarification. And if you would like my one-on-one help with your Medicare enrollment, if you're going to enroll soon or you're already on Medicare and need help with it, on my website, there are links to schedule an appointment with me. If that would be of use to you, I look forward to speaking with you and helping you out. But hope that video was helpful, and I will see you in the next one.